Ladies and gentlemen, welcome to Only Trade to Win. I do not have any buy or sell recommendations or hot stock tips here for you. I'm aware that some of the things that I talk about are not obvious and some you cannot even see. So I do my best to point out and explain those things to you. If you have any suggestions, please comment and I will do my best to improve. Today is Wednesday, December the 28th, 2023. 5:20 a.m. New York time. I hope you all had a great Christmas and I wish you all the best in 2024. One thing you need to know and be warned about before you start investing and trading is that there is nobody who can or will hold you back. And it's totally up to you to decide when and what you buy and more importantly, how you're going to get out. So what I'm doing here is I'm talking about really basic things that everybody should master. A lot of these things will simplify your life and will free up your brain power so you can use it when you're making your purchasing or selling decisions. Most importantly, I teach you how to think for yourself in a very unstructured environment that is completely different from the environment we all live in. So let's go back to our watch list. In my last 3 videos, we reviewed all our indices plus Apple, Microsoft, and Meta. Now we have NVIDIA, Amazon, Google, and Tesla. So let's look at where they left off for the long holiday weekend. As always, we begin by taking a quick look at our indexes. Starting with the Dow Jones Industrial Average, it is sitting right near its all-time high. It flew 1,000 points from this number 5 to its new all-time high, and the Dow is displaying a lot of strength by staying right under its all-time highs and not pulling back at all. Our next index is the S&P 500, and the picture here, it looks really good as well. The S&P was able to make its new 52-week high at 4,600, and now it's 4,775, just a few points under its all-time high that it set 2 years ago, but it is not pulling back as well as Dow. Looks super strong, and hopefully can trade in its all-time high territory and run away like the Dow did. Now our next stop is Nasdaq, and as we said before, it is at its all-time highs. The index is up 54% for the year, and I just wanted to ask the audience and see what you guys think. Can it go higher from here or doesn't need a pullback? Please comment below and let me know what you think. And just as the Dow Jones Industrial Average and the S&P 500, Nasdaq is not pulling back and it looks extremely strong. In the past 2 months, I talked a lot about the fact that the money managers and portfolio managers are looking to get paid this year because we're finishing not only on our yearly highs, we also have lots of all-time highs. And that's big bonuses, my friends. However, there is also another thing that I did mention a few times before, and it's the fact that portfolio managers must have certain stocks like NVIDIA or Meta in their portfolios, or they will have a lot of explaining to do. Let's take Meta for example. We know that ARK Investments sold Meta from number 1 that you see on your screen to number 2, and that's when the price was going from its all-time high of 375 all the way down below 100. Now this year, Meta staged the massive 270+% comeback. And now ARK Investments said that they added Meta back to their portfolio. And I think the really reason they're adding it to their portfolio so they wouldn't look so bad without one of the best performing stocks in the NASDAQ 100 index. So there you go. Portfolio managers are piling into Meta, and Meta is a part of the NASDAQ 100 index. Therefore, the index is going up as well. Our last quick stop for the indexes is Russell 2000 index, which was the laggard for the whole year. I call it the sick man because it was not even at its 52-week highs, and actually it finally made it here. Last time we updated our watch list, Russell was 35% away from its all-time high, and now it has about 20. It is finally like the S&P 500, the Nasdaq and the Dow made its 52-week highs, and also is not pulling back. And if you look at our show about a month ago, we were talking about the fact that we would like Russell to join the rally, so it's a broad rally, and it finally did. So we're having a really broad rally, going super strong on the indexes into the end of the year. Now let's go take a look at our stocks. In our last video, we did a review on Apple, Microsoft, and Meta. So you can see them in purple. Now we have Nvidia, Amazon, Google, and Tesla left. Our first up is my favorite, Nvidia. As you can see, the stock is up more than 230% this year so far, and it is sitting near its all-time highs. One thing I mentioned a lot about Nvidia is that you do not want to buy the stock at its all-time highs because it always pulls back. Here is our first pullback. After it made its all-time highs in July, we got 16%. The next one in September, we got almost 18%. And then we said that we're going to the end of the year, and the next pullback will probably not be as strong as the one before because there is a high demand for this stock. And we did get our pullback. We got almost 11%, and now Nvidia is making it back to the purple line. And now our assumption is that since the stock looks stronger than it was before, it will clear out that all-time high and make a run for it like the Microsoft and the Dow Jones Industrial Average did just a few weeks ago. So Nvidia looks super exciting, and we gotta wait and see if it's gonna make it to that $1,000 per share territory. I am not saying buy or sell anything, but this stock is phenomenal. I am a huge fan of the CEO of the company, and I will definitely do a separate show just reviewing Nvidia. Next up is Google making its 52-week highs last week. And while all the analysts are questioning if Google is going to dominate the AI industry or the AI industry is going to put Google out of business, it's only 5% from its all-time high. It did a lot of heavy lifting trying to get off from that November bottom. And it surely was not a straight-up ride for Google like it was for a lot of other stocks. And Google looks really strong going into the end of the year. So if I had to take a guess, I think they're doing pretty well with their AI development. But we wait and see. Our next stop is Amazon.com. If you look at column number 7, it was one of the big laggers for the year, 30% away from its all-time high, being the second weakest overall stock after Tesla. Now, if we look at the picture for Amazon.com, we can see something different. And the stock that is the second weakest overall from our favorites on NASDAQ is up almost 80% this year. If we look closer, number 1 shows the previous 52-week high for Amazon.com that it set back in September. From that level, it pulled back almost 18% to area number 2. If we zoom out and go back to 2022, we can tell that this high set back in 2022 was a significant area, and when the price came back to it, it did have a reaction. However, the reaction was only half of what it was back in 2022. And the last thing we do is we look at how far Amazon.com is from its all-time highs. As you can see, it is now 21%. It has one more resistance area around $167, and from there on, Amazon.com is ready to challenge its all-time high that it set a little over 2 years ago, back in November of 2021. Our last stop for stocks is Tesla, which is having a hard time making it to its previous 52-week high that it set earlier in July. And regardless of that fact, the stock is up more than 120%. And now it has less than 60% to go to its all-time high. One thing that is certain about Tesla is that nothing is certain. It's one of the most volatile stocks. If we compare it to indexes and stocks that we looked at today, we can tell that it's relatively weak because it's failing to make its 52-week highs and because it's sitting far away from its all-time highs. But we cannot disregard the fact that this stock is up more than 120% this year. So Tesla is a wild guess for me personally. I don't touch it because it's super volatile. You know, one thing I want to share with you that is very important, and it's to be successful in the market, you have to be really flexible. You have to think that anything is possible. A stock can go to 1,000 or it can go to 5,000, and the same stock can go to 0. And I am not talking about any specific stock, I am talking about all of them. And if you can truly accept this and let go of trying to control anything other than yourself, you win. Please take a moment to subscribe to our channel so we can continue this conversation until you find your success in the markets. For today, let's finish with another look at our favorite index this year, the Dow Jones Industrial Average. For the whole year 2023, the news around the world could not get any worse. Inflation was out of control in the US, and to combat it, the Federal Reserve Bank kept raising interest rates all the way up to the 20-year high. Meanwhile, on the other side of the ocean, Russia carried on with the second year of its despicable full-scale war against Ukraine, and it threatened the West with the nukes if it was attacked. In October, Israel declared the war against Hamas and entered Gaza. But regardless of all the bad news, the market climbed the wall of worry, and the Dow made its all-time highs. How can it be, you may ask? And my answer is, how can it not? When all the money in the world can only find one safe haven right now, the United States of America. Its stocks and indexes could only do one thing: absorb the foreign inflows and keep on going higher. And even though I do not know what will happen in the future, I am sure there is no better time to learn about markets than now. Thank you for listening to Only Trade to Win. Please subscribe to our channel and comment below on what things you'd like me to talk about next time and next year, whether it be specific stocks, indexes, or anything you want to know about in the markets. Navigate with care, and I'll see you next time.